Hello and welcome to the final Wealth of Advice market update recorded on the 11th of December 2024. With only 3 weeks left to go of this year, I can't say anything derailing us now, so it is easy to say that it's been a very positive year. All clients who are coming to see us over the last few weeks to do annual reviews and such like are looking at portfolios where the returns over the last 12 months are all in excess of 10%, which is absolutely fantastic. If we could deliver double-digit growth returns every year, my job would be very, very easy. Unfortunately, life isn't like that. However, what I would say, as we approach the 5th anniversary of COVID coming to the world, which was January, February 2020 when we first started hearing about it, we're 5 years on from that, and to all those clients who've stuck the course and came through that 5-year period, well done to you. And you can see the power of being invested for the long term shows that those long-term returns will always come through. We've got our client conference being held at Durham Cricket Club at the end of January, and we're well above the amount of numbers registered for who came last year, so there's only a few spaces left, otherwise the room will be literally over full. So if anyone else wants to come along to that, please don't hesitate to get in touch. That'll be the last Friday of January, as I say, at Durham Cricket Club across there in Chesley Street, so that's all good. Wealth of Advice created a 2025 charity calendar, which you can see a copy of on the screen right now. We want as many people as possible to buy one of those. When we say buy, the money's going to go direct to St Cuthbert's charity in Durham, who we're doing a lot of work for this year. We already raised £1,000 for them at our golf day. We will be doing a golf day next year, but given how dodgy the weather was, we won't be waiting until October the 4th to do it. So we're going to try and pencil in a more summer-based date for that, but we'll be in touch about that. So let's get back to talking about markets and what markets have been up to. In the last few weeks, we've been down to London again, saw various fund managers where the first 3 or 4 sessions were all about what investments and markets might do in 2025, as well as looking back as to what happened in 2024 compared to what was predicted to happen in 2024. And the final speaker that day was Admiral Lord West, who was a former First Sea Lord and former Under Secretary of State for Security and Counter-Terrorism. Bit of a mouthful, but a very good down-to-earth guy. I was fortunate that when the seminar ended, Lord West actually came and sat on our table, so I was asking him loads of questions about what was going on in the world from a geopolitical point of view. I mean, that was what he was there to speak about, how the geopolitics of what's going on in the world might affect investments. And whilst when you put the news on, you might be forgiven for being scared of what's happening with Russia, what's happening with China, etc., etc., he gave a quite calm, sensible way of looking at things. The world's been a crazy place for the last 60, 70, 80 years. It's never going to go away. You're always going to have mad politicians in the world who are going to ratchet up risk. But some of the things he said about Russia and why they want to come to a peaceful, some kind of peaceful end to the Ukraine situation, why Donald Trump is going to try and bring that sort of peace. Russia has suffered over 750,000 casualties in this war, so Putin does need to bring it to an end. It is an attritional, slow war, no good for anyone. The Americans under Trump want to bring this to an end. So when we think about it from a market's point of view, that should be positive for markets if that comes to an end in 2025. He discussed China, what goes on over there. And interestingly, he said it's always been China's philosophy to try and gain world dominance, which we might not like the sound of, by 2050, but crucially without firing one bullet or landing one missile anywhere. China believes war to be very, very uncertain as to what the outcome will be. So China wants to continue growing its economy, growing its influence in parts of Africa and other places. And the funny part of some of the funny things he was saying was Russia thinks they've been very clever getting into bed with China, so to speak, but China is using Russia for its own gains, i.e. buying its oil and gas from Russia at a very, very cheap price compared to what we and the rest of the world will pay. And on the point of Russia and how much it's spending on its war in Ukraine, it's currently spending around 40% of its GDP. So its gross domestic product, the sum of everything Russia generates, 40% of that is going on defence. In the UK at the moment, we spend around about 2%. So the long-term damage to the Russian economy from having this war in Ukraine is going to be very detrimental on its future effects. And as I say, this Admiral Lord West was a really intelligent guy, really down to earth, but quite funny as well at times. And the way he was painting a picture is if Russia's not careful, before too long, China will own Russia because of the amount of money this war is costing. So whilst, as I say, you would be forgiven for being cautious and wary when you put the news channels on of the negative stories you watch, he was kind of painting a picture that, yes, we shouldn't let our guard down. We should always be careful and looking at what's going on. But maybe the geopolitical risks that we faced over the last few years are starting to dissipate. And as I say, we are 5 years coming up from the start of COVID. So much changed in the world over that period of time. Obviously, Donald Trump lost his presidency right at the beginning of COVID, and here he is coming back in January. Some clients had been very scared and cautious about this and asking us, did we think markets were going to fall if Donald Trump became president? Well, quite the opposite has happened since November. Markets have gone up. So the fact that Donald Trump and the Republicans, and this is what the differential needs to be explained, the Republican Party won the presidency, won Congress, won Senate. They won everything in quite a big landslide, to be honest. And what Donald Trump is proposing is further US tax cuts, expansion of fiscal policy, implementing more nationalist trade policies. So that will all boost US equity markets. Negative side of it, it might bring inflation, so let's keep an eye on where the inflation figures will move to in the coming times. But the big thing that we took from what's going to happen in America in the coming period is that 96% of companies on the S&P 500 are forecast to deliver earnings growth, which will be a record if that happens. So the S&P 500 is the biggest stock market in the world that has the most importance to your portfolios, whether it's the Wealth of Advice model portfolios, whether it's Royal London, whether it's Prudential, whichever portfolio you're invested into, you will see that the biggest holding is in the US market and the S&P 500 dominate that. So in years gone by, when you put the 9 o'clock or 10 o'clock news on at the very end when it told you how the FTSE 100 was doing, that would have been a good barometer to look at to see how your investments are holding up. But now, if you want to know what's happening with your investments, see what's happening with the S&P 500. Your huge companies of Amazon, Apple, Meta, which is Facebook, Tesla, Google, all these companies are over in the US and they're making a lot of money. Pleasingly, one of the presentations that we heard last week when we were down in London was saying how the UK market is attractive to be investing into. The UK FTSE 100, and we'll show the graphs on this shortly, hasn't made the same returns as what the American markets have over the last few years, but it's now seen as a good diversifier, i.e. all the big technology, huge companies like that are on the US market, there's none on our market, so that gives investors the ability to invest in the UK to get a different style and a different type of company that they may wish to invest in. So as I say, we came away from the investment seminar last week very, very positive. 2025 looks like it should be another good year for investors, and God, we've needed in so much as we've had 5 years of absolute uncertainty. If you look at the performance of portfolios, 2020 was actually a positive year after everything that happened in the beginning. 2021 bounced back lovely, and then we got December 2021, the end of all the lockdowns and everything like that. The whole world got out spending money again, and then bang, December 2021 we woke up and realised that inflation was going to be here because there was supply chain issues, because everyone in the world had come out to play and spend some money. 2022 started with the Ukraine war, supply chain issues lead to inflation. We had consecutive interest rate rises, and then obviously Kwasi Kwarteng's mini budget in the UK, which was disastrous for us. And we ended 2022 with the worst year I've had or looked at with investment markets. And it took until October 2023 really before markets started to turn. And if you look at performance from November the 1st, 2023 up until now, it's been absolutely fantastic. So hopefully 2025 is a good positive year. What do we need for 2025 to be positive? As I say, we need Donald Trump to come into the White House and not do crazy things, but do things that the markets will like. And we're hoping that's going to happen. We'll be another few months into the current UK Parliament term. Obviously, we've got issues, what's going on in Europe. France has got some problems there. Another election may be called there. Germany, I think, is having another election. All these countries in Europe need to sort themselves out. Germany's going through a very big recession. But if we look on this first chart we're going to show on the screen now, the UK base rate, you can see that from 2022 all the way up until a few months ago, UK base rate had risen and risen and risen, and then a few months ago we started to bring our base rate down. The main bank interest rate is now below 5% again. I would like to see that get closer down to 4%, but that will only really move when we keep an eye on inflation. The next chart, as you can see there, inflation is key to where interest rates go. Inflation really spiked as we got to the end of October 2022, well above 10%, and depending on what goods and items you were buying, lots of people saw inflation well above that figure, whether it was energy, whether it was fuel for your car, energy for the house, or food. Food costs went through the roof. So inflation has come down, but obviously that doesn't mean prices have come down. They've just stopped rising as much as what they were. But here's the thing with it. I mean, if you put the new UK news on, whether it's Sky, BBC, whoever it is, our newspapers, everyone's so negative on the UK. The UK is actually one of the better performing G10 economies in the world over the last 15 years. You wouldn't believe that given some of the negativity we see. But if you think back to that interest rate chart we showed going up 15 consecutive times, the inflation bomb that we had, we didn't see businesses going bust. We didn't see huge amounts of properties being repossessed. We didn't see a huge property crash. Yes, we might have saw house prices level off. But by and large, the UK consumer and the UK PLC stood up well to it. And now as we move forward, we've got to be positive. The US market is by far the most important market for all of your investments. And if we look at the US Consumer Price Index, which is their rate of inflation, you can see how their inflation, exactly the same as ours, went through the roof, peaked at the end of 2022 and has come down nicely to 2023 to 2024. You might hear terms like, oh, it's coming in hotter than expected. All items of inflation's coming in at 2.6% recently. If you take food and energy out, it was 3.33%. So anything less than 4% is really where governments want to be. You will hear this this figure of 2% is where we want to get to. I think hitting that 2% floor is going to be very difficult to achieve in the coming period, but if we can keep it below floor, certainly close to 3, then governments will be happy. Whether that means that rates will continue to come down, interest rates will come down as aggressively in the new year, we'll have to wait and see. But 2.6% for US CPI there is a very, very good number, and we are hoping that the Federal Reserve in the US cuts interest rates in December, so we'll see on that. So now as we come to the final part of the update, where we look at how markets have performed this year, this graph with all sorts of numbers on there. And I put it on there for a reason, so you can say that everything by and large has been positive, apart from the one at the bottom, UK conventional government gilts, that minus 1%. But if you look at the NASDAQ in the US, that's all the technology companies, as I mentioned, Amazon, Apple, Facebook, all these big companies, up almost 30% this year. The S&P 500, which is a much broader index with 500 stocks up on there, 28.89. FTSE 100, 11.39. Again, this reflects as to where you would allocate your portfolio. So you would never go 100% into one market because that's massively risky. But having a small percentage in the FTSE 100 makes sense. A bigger percentage in the S&P 500 also does as well. So 2024 has definitely been good. If you look at market indices performances over 5 years, you can see the S&P 500 up 110%, FTSE only 37.5%. Brexit weighed heavily on that. We're another year on from Brexit. You've got to hope that these trade agreements and trade deals that we've been negotiating get sorted out, and the UK can start getting more growth from that. And as I say, it does show that the longer we have clients invested, you will overcome these short-term ups and downs. Unfortunately, there was a lot of ups and downs over the last 5 years, and hopefully geopolitical risk and other stuff starts to calm down in the coming period, and we can look at the next 5 years with a lot more optimism than what we may have had when COVID came around to the world in March 2020. So thanks again for listening to another Wealth of Advice market update. As I say, it was the final one for 2024. Hope you all have a great Christmas. All the best for 2025, and we'll record another update for you early in the new year. Thank you.